Hi everyone, my name is Ben Jones. I'm an analyst at Dorsey, Wright & Associates. Thanks for joining me on the DWA India Minute. Last week, as you know, was a tough week for the Indian stock market, especially the CNX Nifty. On the 50 rupee chart, we finally witnessed it break through its bullish support line, shifting the trend to negative for the first time since 2009. This is going to be your more intermediate chart, but it definitely suggests that supply is now in control and you need to use caution. The long-term Nifty chart is still trading a positive trend, but it did reverse down to a column of O's. It is still trading above its February support. However, you need to use caution because you don't want to see it fall even further. But as we go into this negative territory, it's important to note that our risk barometers are falling as well. This could be a good sign going forward because if we see, let's say, the percent positive trend chart and the bullish percent chart reverse up into X's as a result of higher prices and buying pressure, it's going to be a great time to buy. If we look at the percent positive trend chart for India, it is now around that 44 percentile area. This measures the number of stocks that are trading in positive trends, so under half of the Indian stocks are right now trading in a positive trend. This is not as low as what we saw in February, which was at 16%. So we want to watch this indicator. If we see it reverse up, more stocks are now trading in positive trends. We're seeing higher prices, as well as the bullish percent for India. We witnessed this indicator fall from a high of 78 down to 38. Now what that means is that in, let's say, in April, over 78% of stocks were on buy signals. Now we're at 38. So we've seen a lot of stocks produce those sell signals. As a result, that selling pressure we just really witnessed this past week, as well as the early part of last week as well. So we need to use caution going forward until we can see a stabilization here, a reversal up into X's. The weakest sector right now, or the most oversold sector right now, is really the financial area, followed by technology. Both of these sectors are now below that 30% level, so under a third of those stocks really trading with buy signals. So definitely use some caution there. If we do see those improve, those will be the first ones that have those oversold characteristics that you really find the best buying opportunities. And those opportunities don't come often. So monitor those two sectors closely. They're going to see some opportunities there. In terms of the matrix in which Tom talked about last week, we still find HCL Technologies, Bharti, ITC, and Tata Consulting Services. Those are those stocks that are up at the top right now. Those are be the areas that possess the most strength, and you should consider allocating towards at this time if you have new money. But right now we recommend using caution going forward just because supply is in control of the Indian stock market right now. Wait until we see some sort of positive sign, such as a reversal up on the bullish percent or the positive trend chart. But catch us next week and we'll go into more detail about what we're seeing in the Indian stock market, and we'll talk to you soon.